Good day, Junior Tickies. I'm Mrs. Bromacombe, and we are going to look at adjustments where we integrate creditors and debtors in the balance sheet. This is something that we've done in debtors and creditors reconciliation, so we're just going to quickly revise it. This can be asked as year-end adjustments, where a creditor has a debit balance and we need to transfer it to the debtor's control, the debtor's ledger. If we make a change in the individual's account, we need to make a change in the control account as well. So if that happens, it means my assets will increase and liabilities will increase. Or it could happen that we need to transfer a credit balance to the debtor's control. When that happens, assets will minus and liabilities will decrease. Looking at debtors, we can have a debtor with a debit balance that needs to be transferred. If that happens, it means that my debtor's control will be credited, creditor's control is debited, so assets minus, liabilities minus. If we have a debtor with a credit balance that needs to be transferred to the creditor's ledger, it will be that my debtor's control is debited, creditor's control is credited, therefore assets plus, liabilities plus. So looking at an activity, it's an example where a debtor with a credit balance of 7,000 is to be transferred to the creditor's ledger. So what do we need to do? A debtor with a credit balance means that we will need to debit the debtor's control account so that the creditor's control account can be credited. Now we need to show this on the accounting equation and how it will appear in my financial statements. So on the accounting equation, my assets will plus, liabilities will plus. Do not confuse it. Just because I'm taking it out of the debtor's control account doesn't mean minus. It means I need to add it to the balance. It will have a positive effect on the balance. So in my balance sheet, trade and other receivables, we would have debtors control 75,000 from the pre-adjustment plus 7,000. For creditors control, in trade and other payables, 65,200 from the pre-adjustment trial balance plus 7,000. Thank you very much. I want to leave you with this quote: the expert in anything was once a beginner. Now we've now concluded. We've basically looked at where debtors is involved with bad debts recovered, provision for bad debts, where we need to transfer balances from debtors to creditors or from creditors to debtors. So now next we're going to move on to errors and omissions. I hope you have a wonderful day.